something shifted about a year ago. A totally different tone started to happen. And we kind of got this information from the SEC that, well, actually, we think everything other than Bitcoin is a security.
The crypto industry is currently under attack. With the SEC continuing to get more and more aggressive with their regulations, we've seen almost all altcoins dump over 25% in the last few days alone, and over $4 billion leaving exchanges in the US. We're going to go over what all this means for crypto and what you need to be aware of. Just in case you haven't been aware with what's going on within the crypto space, the SEC has sued Binance US and Coinbase, saying that they are unregistered brokers and they're listing unregistered securities, basically making a lot of money leave the crypto space in the United States. On top of that, Robinhood ends support for all tokens named in the SEC lawsuit as securities, including Cardano, Polygon, and Solana. The big thing here is that if you are using Robinhood for your crypto, and basically anything except Bitcoin at this point, users are able to continue trading and transferring these 3 tokens on the app until the deadline, which is June 27th. After that deadline, tokens left in the user's account will be automatically sold for market value. In a response to this, and also Coinbase and Binance, we've seen those tokens and many other altcoin tokens, basically said to be securities, dump at least 25 to 30% within the last few days. Just on Saturday alone, an analytics firm Look On Chain has said in multiple tweets that they've seen $6.3 million in Matic sent to Binance and over $3.5 million sent to Coinbase in order for them to get that off the exchanges. This lack of liquidity in these crypto markets, or at least the exchanges within the US, is a major reason as to why a lot of these tokens have fallen well over 25% in the last 24 hours. As we could see here, obviously the crypto markets were declining. The 3 charts that we have here are Matic, Solana, and Cardano. And you could see that obviously they were kind of consolidating, and then they started having these massive drops right around here on June 4th when that first publishment of the SEC suing Binance was put out. And then right here is when we had that massive 25% decline starting in June 9th, where you see all of these 3 altcoins basically dump because of the illiquid environments in these exchanges. Everyone's pulling out of the exchanges, making it very difficult to buy and sell a lot of these crypto assets. Now, as a result of all of this uncertainty and the regulatory push by the SEC, the clampdown has spurred over $4 billion in deposits to flight from Binance and Coinbase and Binance.us. As you could see, the 3 exchanges that they named basically had outflows of $3.1 billion via the Ethereum network and almost $1 billion in the Bitcoin network between Monday and Thursday alone, which was when the heat of these regulatory issues really spurred up. Now, this is definitely one thing that you need to be very, very careful of. The US-based exchange, which they're talking about Binance US, said on Friday that users should withdraw USD as soon as possible following the SEC's extremely aggressive and intimidating tactics. Basically, what they're saying is that the SEC provided Binance.us with a freeze on all of their assets. So if you're holding USD or basically any asset within Binance.us, that will be frozen when that goes into act, and you will not be able to pull out any of your money. And to make matters worse, the platform has suspended the US dollar deposits and will delist USD trading pairs shortly while it temporarily transitions to a crypto-only exchange. And before we dig into the chart on the total market cap for crypto altcoins, you need to be aware that this could be a push by the SEC to basically call Binance on their bluff, when back in the day they called that they have a 1-to-1 reserve on all of their assets. And so what the SEC might be trying to do is that they're going to try to liquidate all of Binance's reserves in order for them to see if they were actually telling the truth, or if Binance goes out of business because they were lying, saying that they hold all of these to a 1-to-1 reserve, but yet they don't. Now, if we take a look at the total crypto market cap, excluding Bitcoin and Ethereum, you could see that we've had a massive push to the downside, basically coming all the way to these lows in December of 2022. The total crypto market cap is sitting just above 300 billion. Now, it's coming to this very, very important zone because the last time that was here was all the way back in February of 2021 during the bull market. Now, if we do eventually break down here, there's no telling to how far down it can go, because the next support that we see is back here at $139 billion back in December of 2020, well over 2.5 years ago. So the crypto market in terms of altcoins are hitting a very pivotal moment because there's really no telling what could happen next. And if we look at the total exchange transaction fees, we've only had 2 other spikes in previous years, where we've had the FTX implosion, where the fees were up to 12.3 Bitcoin. And then we had the ordinal inscriptions, where we had that massive 400,000 unconfirmed transactions on the Bitcoin blockchain, which rose up to 41 Bitcoin. Now what we're seeing is the Binance and SEC regulations, where we've had Bitcoin fees jump all the way up to 15 Bitcoin during all of this. Now, when you take a look at the price action during this didn't really get affected too much, but we did see a long sideways movement from both. And so what we might see here is that maybe Bitcoin's price or the crypto markets don't continue to fall down, because we've already seen a lot of that, but we will see a lot of sideways movement. And to basically touch on that point a little more, while we've already seen a lot of these altcoins dump 25 to 30%, a lot of that was due because a lot of people were taking their money off of the exchanges or selling it on the centralized exchanges. So one, their assets wouldn't be frozen up in Bitcoin US or Coinbase. And two, they're moving a lot of these crypto assets or the money offshore or into other markets. And again, it's not just Solana, Polygon, and Cardano. It's basically every single altcoin except for Bitcoin, as you heard in the first part of this video. And just to kind of prove the point home, here's a full list of tokens the SEC currently contends as securities. And you can see the list continues to go on and on and on. Now, Will points out the effects of Operation Choke Point 2.0 in such a beautiful way. Decentralized exchange volumes relative to centralized exchange volumes are at an all-time high, meaning people are taking it off centralized exchanges and putting all their crypto and money into things like Uniswap. Tether is at an all-time high, while the USDC coin is down 50%. Due to it being connected to Coinbase, people are moving all of their money over to Tether. And again, offshore volumes are near all-time highs at 86%. In the end, capital and activity will just move offshore and on-chain, ultimately giving the US government less oversight. And so while the government wants to protect investors, all they're really doing is they're moving money, capital, and innovation offshore into other accounts. At the end of the day, they really can't stop crypto and the innovation and all of the money flow. But what they can do is they can keep it out of the United States. And while on this channel we like to focus a little bit more on financial activity in the markets, we don't like to get too political, but it does seem like this is starting to become a political war within the United States. As the Winklevoss twins said, Democrats' war on crypto will lose its key voter. And just to prove the point, obviously we've had Joe Biden in the past saying that I'm not going to agree to a deal that protects wealthy tax cheats and crypto traders while putting food assistance at risk. We've also got the crypto or the anti-crypto army from Elizabeth Warren. We obviously have the SEC chair Gensler, who's against hucksters, fraudsters, and scam artists, and we obviously know his stance on crypto. And Barney Frank is saying that regulators shuttered Signature Bank to show crypto is toxic. Obviously, when we saw all those banks fail, they were blaming crypto on a lot of the failure. And then if you look on the opposite side of the spectrum, where we have Democrats against it, anti-crypto, we've got the Republicans like Robert Kennedy Jr., who just made his campaign at the Bitcoin conference. And then Senator Loomis, who is also a Republican, is saying that she is going to offer U.S. crypto-friendly regulations amid SEC lawsuits. So while we don't want to make this political, it really is starting to seem very political, especially with the Bitcoin having a year away and the re-elections a year away. But at the end of the day, when we look at everything, the biggest thing that you need to take away is that while in the future, maybe a couple of years from now, when regulations will be a little bit more lenient or there's going to be actual rules that we can abide by, as of right now, if you're doing any altcoin trading, definitely don't do it in the United States. And as far as all the altcoins are considered, right now is probably one of the worst times to hold any altcoins. As you could see, the Bitcoin dominance continues to rise because as altcoins get murdered in this market, all of the money is going to flow back into Bitcoin or back into safer assets outside of crypto. And so right now is not the time to invest in these crypto assets. Right now is not a buy the dip moment. It's really just find a safe haven moment because there's so much uncertainty with the United States and there's just so much price action and volatility that's going on within the crypto markets. So unless that's for you, I am personally just going to stay away and keep my money out of altcoins until they're ready to pump.